Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over two things and two things only. First and foremost, your catalyst for this week, the incoming economic data. What happened today that actually sets us up well, that should be a positive catalyst for markets? We talked about it in the last video. It's no surprise. It's Foxconn earnings. They kind of are paving the way for a strong earnings season. This will ease some anxieties around AI. Foxconn said, yeah, 2025 starting off pretty damn strong. And I think that could be a big positive for Tesla and broader markets. But we do have a lot of other economic data coming out this week, a lot of Fed speakers. So we'll talk about that. The second thing we're going to do here in this video is I will give you a price target prediction, at least this week, for Tesla stock. Now, is this a recommendation? No. Should you buy Tesla based on what I say, especially with short-term options? No. If you trade options, you will lose all of your money. I like to give out these price targets sometimes because it's fun. I like to speculate on where I think a stock can reasonably go. And if I'm right, I'm right. If I'm wrong, I'm wrong. I don't expect to get brownie points if I'm right. And I don't expect to be criticized if I am wrong, because it's just my opinion. And I get enough criticism as is. I mean, constructive criticism is one thing, and I actually love that. But people that just try to bring other people down, well, have pretty miserable lives. And there's quite a bit of that on YouTube. Now, we are also going to be faced with a potential gamma squeeze for Tesla stock. I say that like it's a bad thing, like we're going to be faced with a challenge, and it's a good thing, okay? Wall Street's coming back to the office coming on January 6th. A lot of people just take off from like December 20th through the first week of January. So we're back starting tomorrow. This does mean we're probably going to get some new positioning for 2025, some repositioning back into our markets. The tax loss harvesters are gone. They're now likely going to start being able, after that 30-day waiting period between tax loss harvesting and buying back, they're probably getting to the point where a lot of them can start buying back their tax loss harvested positions. That could be really good for a broader market rally. And that's kind of what we seen on Friday. It was not just big tech. It was not just one area that did well. Most areas of our markets did pretty well on Friday. Now, some areas are going to do better than others. I believe Tesla is the best stock really to own for next year, especially if you're considering just a larger market cap company. Tesla has the most to gain from AI. And really launching the biggest AI endeavor we've ever seen in the history of mankind. I mean, do you want to bet on that, or do you want to bet against that? Simplest way to put it. You probably want to bet on that, not against it. From a reasonable perspective, I already think Tesla has a lot going for itself, considering that backdrop. I mean, if the AI situation is alive and well, if AI is still booming in markets, there's no better place to be than Tesla. And let's face it, 2025 is Tesla's big AI year. And let's face it, 2025 is going to go down in the history books for Tesla. It's going to really be a moment in which we look back 5 to 10 years from now and say, yeah, that's when the AI revolution for Tesla really got going. The question is, do you want to look back and say, I invested in that, I was a part of that? Or do you want to look back and say, damn, I should have bought as much Tesla as I possibly could. I knew what was coming, kind of like the iPhone in 2008. With that said, as I explained in the last video, Foxconn, the iPhone and AI server assembly giant, said December's revenue rose 42.31% year on year. That's important because, I mean, 42.31% year on year in December. That's a good sign that company earnings, generally speaking, are going to be good, right? Again, especially in the AI sector. Like this bodes really well for Nvidia, for Microsoft, for Google, for Amazon, right? Anything that has to do with AI, data centers, servers, which is a good section of the market cap weighting in the S&P. Fourth quarter revenue was up 15.17%, a new record high, 64.66 billion. 2024 revenue was up 11.37% to 208.2 billion, a new all-time high. And Foxconn said the first quarter of 2025 should show significant growth, but will track traditional off-season performance similar to the average of the last 5 years. So, I mean, there's a lot to be excited about there for other US-based big tech companies. I doubt Foxconn can have this strong of an earnings report and then the rest of big tech fails. So it does create a little bit more confidence in at least Q4 earnings and maybe some optimism about what 2025 earnings could look like as well. I believe this will be positive for your AI stocks, SMCI, Nvidia, Tesla, software names. Like, this is going to be positive for a lot of areas of our markets coming tomorrow morning. And that could really help to propel a continuation of the gamma squeeze that we seen on Friday for Tesla stock. Let's get into some of the big economic catalyst for this upcoming week. And starting off on Monday, you have factory orders month over month and final numbers for S&P Global Composite PMIs, services PMIs, and manufacturing PMIs. Now, first, starting off on Monday, you have factory orders month over month and final numbers for S&P Global Composite PMI and services PMI. So Monday is a pretty slow day to start off this week from an economic data perspective. On Tuesday, you have the balance of trade, the exports and imports that can affect your GDP estimates. And last we checked, the Atlanta Fed GDP Now tracker was tracking at, 2.4%, which it has recently fallen from almost 4%. So GDP estimates have been coming down a bit, probably a good thing since they've been running so high. On Tuesday, we will get ISM services PMI. Manufacturing PMIs came in really good on Friday, better than expected. That helped markets to move higher. We want to see services come in good also because this is 80% of the U.S. economy, okay? So services, anything above 50 is positive. We are expecting a number of about 54. Last month was 52.1. So you are expecting a jump there in your services PMIs. And then we have JOLTS job openings. Last month, they were at 7.74 million. We're expecting 7.65 million. So expecting a drop of about 100,000. If it comes in, higher, that's probably not good. If it comes in lower, that's what you want to see, but you don't want to see it really like plummet. You just want to see it kind of trend lower or even go sideways at this point would be okay. You just don't want to see big moves there because that's really going to fluctuate that unemployment rate a lot. So the JOLT job openings could be big for the unemployment rate that we will get out later this upcoming week. On Wednesday, you have the ADP employment change, the private payroll report, expecting 143,000 jobs to be added in the month of December. Fed Waller will also speak around the same time the ADP employment change is coming out. And then you get the FOMC minutes at 2 p.m. Eastern Standard Time on Wednesday. On Thursday, you will get Challenger job cuts expecting 65,000. Initial jobless claims expecting that to actually come in lower than last week. Last week was 211,000. We're expecting 210,000. And Fed Harker will be speaking on Thursday. Wholesale inventories month over month will also be coming out in the morning. And then you have a lot of Fed speakers Thursday afternoon. Fed Barkin, Fed Schmidt, and Fed Bowman will also be speaking as well between about lunchtime and 2 p.m. Eastern Standard Time. So lots of Fed speakers this week starting up again. And on Friday, you have the non-farm payrolls report expecting 150 to 200,000 jobs. Last month was 227,000 jobs. And the unemployment rate is expected to go up to 4.3%. So that would be a new high for the last couple of years. And the Michigan consumer sentiment is expected to also rise to 75 from 74.0 last month. And if you guys want my opinion on this data, I'm not concerned about it. I think, if anything, it probably surprises to the upside, considering we've gotten a lot of holiday shopping data out from like MasterCard and other sources, freight data, right, that suggests that the holiday season was better than expected. I don't think the data is anything to worry about in December. Where you want to be maybe a little bit more concerned, or we will be a little bit more concerned, is February, when we start to get January's data, because that's when you normally see that seasonal, obviously, drop off in activity after the holiday shopping season. But how dramatic will that be this year? I do not know. But overall, I'm not concerned about December's data reports that we will be getting out this week. I think they're probably going to be pretty good. Now, we also have a big catalyst coming up on January 20th. That is obviously the inauguration. I actually think that could be a bullish catalyst as well, considering a lot of the fear that we have seen over the past couple of weeks. The 8% drawdown in the RSP could be bought up, especially as Trump gets inaugurated and we start to realize, oh, wait, deregulation should be coming. A more responsible federal government could be coming. An improvement to the consumer could be coming, and lower corporate taxes, right? All of the positive things that potentially go along with a Trump presidency. Tariffs, yes, that's an issue, but I think we're already positioned in a good way for that. If we get a 10% blanket tariff, for an example, that's going to be a positive for our markets, not a negative, considering we're kind of preconditioned for 20+% as a kind of blanket tariff. So I think there's a lot of room to be bullish at this point. I think Trump would have to take it really far for markets to get too concerned. I mean, what? Trump threatened a 20-25% tariff on Canada and Mexico, and what happened? The markets ripped higher the next day because they're like, oh wait, China's not included in that? Like, that's it? Okay, so I'm not really concerned about that. Earnings season doesn't look like we have anything to be concerned about there also. Again, considering the holiday quarter, looks good so far from the data that we have seen, spending data at least, and the earnings that we're getting from Foxconn today really just reaffirms that. Earnings season will start for Q4 on January 15th with your major banks that report from January 15th throughout that week. And then you start off the week after that with like TSM, Netflix, Tesla, some of your earlier reporters. And then the following week, you'll get more of your big tech names. And then the week after that, you'll get more of your big tech names. So really over the next month or so, I'm not super concerned about the markets. Now, I don't like big tech as much. I like Tesla a lot, the most, okay, out of any other stock in our markets. But I'm not a huge fan of your other big tech names for 2025. So it'll be interesting to see how those stocks get traded if people are really bullish on those, or they don't want to own those as much. We will see, and that can definitely influence the headline S&P. But as far as Tesla, I think there's a lot of things going right for Tesla. And as long as this week is not a disaster, as long as this week is kind of as I expect and as I've laid out kind of in this video, I think the gamma squeeze will likely continue. It would not surprise me if Tesla's a $470 to $480 stock by this Friday. I mean, to get to 470 from here would be upside of about 14%. To get to 480 would be upside of about 17%. That's kind of in the cards this week for Tesla, in my personal opinion. Again, people are coming back to the office. They're going to reposition back into Tesla. Foxconn earnings were good. The economic data I'm not concerned with. The markets, generally speaking, are pretty damn negative right now. And a lot of Tesla's indicators have reset, like the RSI is at 52.5. So you're now neutral on the RSI. The MACD has also, dropped dramatically, and there's a big gap here, which leaves a lot of room for a reversal to the upside. Tesla was down 6% the first trading day of 2025 based on deliveries, and you filled that gap on the second day of trading in 2025. Okay, like, that's a good sign. That's a really good sign. Now we need to get above that 20-day moving average at about $423 per share. But once we get above that, we have a pretty clear shot to 460. I think we probably overshoot that with the gamma squeeze up to that 470, 480 level. Could we be a $500 stock by this Friday? We could. Would I bet the farm on that? No. But it does seem likely to me that we get a pretty nice rally this week for Tesla stock. My opinions. Let me know what you guys think about this down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.